Hey everybody, Boris, welcome to the weekly technicals for October 10th through October 14th for the majors, euro dollar, dollar yen, and pound dollar. Cable steals the show is really kind of the title, I think, of last week, because of course we had this monster, absolutely unpredictable, wild ride in cable on Friday that dropped us 700 pips in a matter of 30 seconds before recovering not all of it. And that's the key thing. I think not all of it is the key takeaway on the cable side. But even as I record this on a Saturday afternoon in New York, the political situation in the U.S. is in complete turmoil over the Donald Trump controversy, which could lead to him potentially quitting the GOP nomination. I don't know if this is going to happen. It certainly seems unlikely. There's just tremendous amount of institutional resistance to actually somebody coming off the ballot right now, because all the ballots have been printed in the U.S. But the bottom line is we're sort of entering into completely uncharted territory, both politically and economically, as we approach the end of the election season in the U.S. And that could very well reflect itself in the currency market through a lot of instability, which potentially means that we could be seeing, of course, move to the safe haven currencies, especially the yen and perhaps even the Swiss franc, and just a lot more volatility than I think any of us would expect, given the fact that pretty much on the economic side it's just quiet. There's nothing on the calendar this week at all except for U.S. retail sales and FOMC minutes. Nothing here to really move markets one way or the other. We are all systems go more or less on the U.S. economic front towards a December rate hike, and the market's just kind of quietly accumulating that sentiment towards a pro-dollar stance. But there's just so much sideline stories that really have nothing to do with economics, that are really political in nature, that could have a big impact on the market, which is why trying to forecast whatever we can do here comes with a big caveat that volatility is going to be, I think, massive. That having been said, though, what's interesting is that if you actually look at the prices, the volatility within the prices has really not been as let me just move this over so you guys can see this a little bit better. I'm sorry. There we go. Has not been massive at all. We've had the moves, but I think the most important thing is when you look at the euro, the volatility there has just been stark contrast, just an incredibly stark contrast to the volatility in the pound and even to the yen. We've literally been trapped in a 100-point range for a month and a half. The upper end of the range is a 200-point move of 1,300 to 1,100. We have not been able to break one or the other for a month and a half, or I think almost 2 months. And that's almost record in its low volatility stance, because some of you can easily remember when we moved 100 points in an hour regularly in the euro over the last few years. So the fact that we haven't been able to move then 100 points in one direction over a couple of months is really an interesting statement to the fact that the market itself is at a standstill, really trying to figure out where the next directional move comes in. What's also ironic, and we'll take a look at the charts here, I think it's really worth noting, is that there's a sort of a serious discrepancy between what I'm seeing on the charts and what is the conventional fundamental view. Because the conventional fundamental view right now is clearly pro-dollar stance. Clearly, we're going up on rates in the U.S. come December. All the systems are relatively go. Clearly, the Fed is in a hiking mode, and therefore you're going to have monetary policy divergence. Because the flip side of it is that despite small rhetoric last week about the fact that the ECB is going to begin the tapering QE, there was very little, I think, motivation, especially on the ECB Council, to want to do anything but maintain the pace as is. The growth within the Eurozone is stationary. It's not enough here for ECB to let go, ease up on the gas pedal. And so there's really a little on the European side to kind of provide a support for the euro. And what's interesting, though, is that the euro is seeing some support. And I guess it's a function of the fact that the market is just not as convinced about the dollar strength as the fundamentals would lead you to believe. This is also evident in the failure of dollar yen to, of course, break the 104s post the NFPs, which were mildly missing on the top side. But overall, nothing out of the NFPs on Friday really suggests that the Fed should change its stance onto a December rate hike. And I think pretty much all systems go, unless, of course, we have National Guard on the streets and complete chaos and martial law in the U.S. over the next couple of weeks, which is not at all impossible to imagine, given the incredible turbulence that's happening in the political scene here. So, getting to the point of turbulence here, and the turbulent star of the show is certainly cable. I mean, cable story, well known. We've been talking about it forever. That the Brexit story has going to continue to weigh on cable going forward. And what's interesting is, of course, that the political story in UK is exacerbated by the fact that it appears that most UK politicians now are focusing on the immigration issue versus the market access issue. This is what really freaked out the market. This is why it seems like there's much more secular downside to cable than even the biggest bears view. Because if we're in a situation where UK politicians are unwilling to compromise on the immigration issue, which is a hot button political issue, and Europeans, of course, are going to be completely unwilling to compromise on the market access issue, it's going to leave the pound floating by itself. And the biggest issue, or the biggest question regarding the UK economy, is whether the financial sector within the UK economy is going to be able to survive this cut, this separation from Europe. Because if London stops being the global finance capital of the world, UK economy essentially becomes non-existent. Yes, I understand there's lots of other parts of UK economy, and even the fact that there's a lot of multinationals on UK soil that essentially passport themselves into Europe, and because of the English language predominance, makes it much easier for everybody to be there. All of those things will go by the wayside. But really, the core issue is if finance doesn't survive this Brexit issue, you can forget everything. And the most dire predictions on UK economy was that there could be a contraction of 6 to 7% in GDP. So, which means basically that the worst is not over. The worst is not over, and I think when you look at it technically, it still shows that cable is much more a sell in the rallies than any kind of a buy to dip at these current levels. So let's just take a look at the charts and just see sort of the gradation of volatility, which I think is really the interesting story here on the technical side. So starting with the euro, the lowest volatility trade we have here, which is just a 111. If we sort of look at 111, 113 as the broader part of the ranges, the upper end of the ranges, and that's kind of where we're bouncing around. Now, the one thing that I think is very important to know technically, because it's so easy to just want to get long dollars here and say, yes, I'm going to short the euro at any of these levels, is to appreciate that what's really happening technically here is a very solid support at the 111.50. This buy up here is much more euro bullish than it is dollar bullish, which means that I think, at the very minimum, if I'm coming in here, I really want to be a buyer with a potential for euro maybe to rally to 1250, 1300. How it acts at those levels will kind of determine whether this is a surprisingly breakout move in the euro, or whether this is just simply another short squeeze to the top of the range. But the one thing that I would be very, very cautious about is trying to fade this rally at these levels. We either need to see the euro break the 111 with a vengeance and just sort of destroy the last gasp of the bulls, or peter out at the upper end of the ranges. Trying to short it here off the bottom of the range is a very dangerous proposition. Maybe it will work, but my instinct here is actually to buy the euro here, because technically what it's shown is that we may have a little bit more short covering going on, irrespective of whatever you think is fundamentally going on. In fact, you could make the argument here that the turbulence in the U.S. on the political scene could indeed create euro as a safe haven harbor for the near term. And maybe that's what technicals are starting to begin to show us. Regardless of whatever the reasons, I think it's important to respect the fact that this is not technically a sell the euro trade right now, and therefore you should really tread carefully if you're thinking about doing that. On a dollar-yen story, classic double top of the 104s, yes. Big failure, yeah, so on and so forth. The more interesting point to me now is the 102. If we can hold the 102, or sort of, 101.50, 102, if that area finds buyers, actually that is a relatively dollar bullish construct. And I'll tell you why. Because what happens then is, if you look at a longer term chart, you essentially have a very, very solid foundational base with, if we again make a bottom of the 101.50, 102s, a higher low. And that sets us up potentially for yet another assault on the 104 level and a breakout and a true breakout above that. 3 times is the charm. If we break out the 104s over the next couple of weeks, that puts us on path towards the 106, 107s, and just sort of puts us on a much stronger, longer-term path. It's still, to me, ironically enough, so if with the euro, I wouldn't necessarily be shorting at these levels. With the yen, what I would be doing is just sort of patiently waiting for the 102, 101.50 to buy the dip, because ultimately the yields in the U.S. appear to have bottomed out, and as long as the yields in the U.S. appear to have bottomed out, and the fixed market has decided that yes, we're going to eventually have a higher yielding regime than we currently have, that ultimately is positive dollar yen, and that should provide a nice boost to the pair. Also, if we suddenly, for some reason, catch a bid and take out the 104s this week with a vengeance, that also would be a very bullish signal. So to me, I really want to be buying the dips here on dollar yen, because ultimately I think the dollar story is relatively bullish. Last but not least, and certainly most interesting, is this crazy price action in cable. And what does this tell us, I think, about cable? So, typically when we have these spike lows, they get revisited one way or the other. It's really rare. I mean, it's nothing is out of the ordinary. It's not impossible to imagine that we would have what's called a V-shaped bottom, where just a spike low, and then everything is like everybody has amnesia and they completely forget everything, and we squeeze up and we go all the way up to 130. Is that possible? It's of course it's possible. I mean, it's possible if suddenly Theresa May decides, hey, we really want a soft Brexit and we really don't want to isolate ourselves from the rest of the European Union, and we're willing to compromise on the immigration issue. That could be possible, but it doesn't seem probable. As a matter of fact, it seems to be going the other way. And there's an article in Bloomberg this week that is just shocking, because it shows how the UK government is drafting a set of laws or a set of regulations that sound exactly like the Nuremberg laws during Nazi Germany. I mean, it's astounding at the amount of prejudice that's now sweeping through the UK political system. So, to me, cable is a sell until I see some sort of a fundamental signal that maybe the government has decided to change its mind, which means that ultimately the 125, 127 zone is just a ripe area for laying out shorts against whatever short squeeze we may have here to rebalance. And then later on, I think we have a move perhaps to test maybe all the way down to the lows, but certainly halfway down the road to 122s, I think would be a reasonable move down. We don't have very much UK data, and the market, frankly, at this point doesn't care, because you could have great UK data and none of it matters, because what the market is really looking at is the near-term position of whether they're going to trigger Article 50 in the first quarter of 2017, and whether the rhetoric between the UK politicians and the EU politicians gets more heated or sort of calms down a little bit. In many ways, it's going to be a political trade for quite a while. But this trade did a lot of damage. Don't fool yourself. In my opinion, I think this did a huge amount of damage, both technical and psychological, to cable. So while the instinct here is to buy the dip, I think the much smarter trade here is to sell any kind of a rally all the way out to 27.50 for a possible resumption and a retest of the bottom here, or at least the near-term bottom in cable. So very interesting, lots and lots of side stories, I think, in FX. What makes FX so interesting, of course, is that we don't necessarily always trade economics. We sometimes trade politics, and politics seem to be the dominant story on both sides of the Atlantic as we approach the next week of trade. Wish you guys the best luck with best trading. Boris Schlossberg, over and out.